Hey, it's Ted McGrath. All right, after yesterday, we bounced off a little bit. Bitcoin's back down. It's blood in the streets again. Uncertainty there. And what is going on? Well, number one, we're going to talk about today the government shutdown. It's definitely affecting liquidity in the economy. And that's a huge reason why we aren't bouncing up right now. Number two, we're going to talk about the ETF outflows with Ethereum and Bitcoin. Number three, we've got BMNR just tanking down, so you could get prepared for BMNR to go lower. It's about 38 right now, could go down to the lower 30s. And then ultimately, we're going to see what's going to happen in the future and what's actually going on in the markets with some of the other players like MSTR and BMNR, and also some people who are optimistic despite what's going on. Now, not tax advice, not financial advice, not legal advice. We're going to jump in right now. I think the big question people has is, will Bitcoin hold its 100K price point? We know it breached it the other day and went way below it. Well, kind of below it, 98,900. And then it bounced back to 104, and now it's back down below 102 right now. So it is very real that Bitcoin could go down to $96,000, $95,000. So you could brace yourself for that. And what could turn around this cycle right now is what we're going to talk about in today's video. All right. Now, if you're stressed out right now, which pretty much everybody is in the markets, particularly anybody who owns Bitcoin, MSTR, anything in crypto. But if you're stressed out right now, number one, I'm going to give you a free gift to get my trading strategy. Even today, as the markets dropped, I picked up more shares of BMNR again. So people who have confidence right now are buying the dip, and people who don't have confidence are sitting there and uncertain, not knowing what to do. And if they don't have excess cash flow sitting around, they can't buy the dip. So down below, I have a trading strategy. I use it every day, even when the markets are down, and picking up more shares. So you can snag down below. Also, if you want to get more certainty in the crypto markets, I created a new book called Money Game. It's been a passion project. You can go get the book down below here, and hope that serves you. Okay, you can enter your name and email. You get the book, and you'll get the trading video. All right. During these market times, it's very uncertain. It's very stressful for people. So I do understand what everybody's going through. We're all going through the same things. I just soften the blow by trading to pick up shares almost every single day. I'm winning the last 16 out of 17 weeks now. So as BMNR has been dropping over the last month, I'm gobbling up shares at the bottom. Okay. Without taking money out of my pocket, just by trading and picking up shares. Selling high, buying back low. At the end of the day, I get back in my position and I'm holding BMNR for the long term. Okay, let's get into the videotape here, all right? So here's what Tom Lee's talking about. I think you see that Tom Lee has turned a little bit more bearish in terms of his predictions. His predictions have been over the top of what's going to happen by the end of the year. He explained that Bitcoin's drop was triggered by a cascade of macro headwinds. So first and foremost, you got to look at the government shutdown. Liquidity is just being drained out of the system. I'm going to show you this here in a moment. But, you know, if you look at just the shutdown of what's going on with airports and planes and the staff there's a major problem going in the market with the shutdown. Now, the positive news on that is every time the government is shut down and they reopen again, there's a huge bounce in the S&P 500 shooting back up, which would be good for crypto too, to shoot back up. So that's a little bit of positive news in the devastation that we're experiencing right now. All right, so you got U.S. government shutdown scare for sure. That was one reason for the big drop. Hawkish tone from the Fed saying, you know, more rate cuts are not a foregone conclusion. And then you've got the Treasury liquidity tightening. So even though you have the Fed pumping some money into the market from repos, and they're pumping more money into the banks, we have this problem that's going on in the economy that I'm going to talk about right now, which is causing a little bit of a liquidity crunch for sure. And Lee says these headwinds are about to become tailwinds, so he's still optimistic about things. But even in his recent video that I'm going to show you right now, he says we're looking at a couple weeks on this, is his viewpoint. So here's what he has to say.
When we had the COVID shock. And in both cases, those were really widespread deleveraging events in crypto, because as you know, in crypto, there is typically a lot of leverage. The October 10th deleveraging was the biggest in history. And that means there are still ripple effects being felt even 2 weeks later. There has been a DeFi protocol streamer that actually reported a pretty sizable loss, and that created further ripple effects. And that's what happened yesterday along with this thing called the balancer hack. So I'd say it's probably still a couple of more weeks. The good news is there aren't a lot of bodies floating to the surface, so it doesn't feel systematic, but it's going to take some time for confidence to come back. And I think that's why crypto took it so hard in the last couple of weeks.
Got it. So what's the read through to stocks, specifically the QQQ or the NASDAQ 100? We know there's always been this very strong, or in more recent years, a strong correlation between the two.
Yeah, and the linkages are growing because, as you know, like market makers actually trade both products. And I think in general, people get nervous because part of it is stocks have been up 6 months in a row. And we have to keep in mind that in October, we had the wobble in the first half before markets found their footing. I wouldn't be surprised if people are just pausing here and saying, look, we still have the shutdown. We've had 6 months in a row, stocks are up, markets are overbought, and they get a little nervous. But let's say that just means a wobble in the first half of November. Since 1928, okay, 100 years of data, when markets have been up 6 months in a row, 5 or 6 times you build on those gains with an average gain of 3%. And in 1936, the market was flat. I'm sorry, 1942. So in other words, you either have a flat November or actually strong. It's actually a good sign we've been up for 6 months in a row.
Okay, so if you're just joining us, he's talking about the markets. He's not talking about crypto. In the first half of the video, he's talking about crypto, and he was mentioning a little bit about what's happening in the marketplace right now. And so he's talking about potential tailwinds coming in, even though we have massive headwinds. Once those issues resolve that I just talked about, again, if you're just joining us, the government shutdown is playing a major role right now in liquidity not being in the marketplace. If the government shutdown stops, we will get more liquidity going back into the marketplace. And typically, we've always seen historically a bounce with the S&P 500. When that happens, a bounce up. And so that could be good for crypto as well. Bitcoin thrives on liquidity. And when central banks or treasuries stop draining it, risk assets rebound. So even though you got the Fed doing some repos and pumping some money into the banking system, we have a liquidity crunch because of what's going on in the economy right now with the government shutdown. Okay. So if you look at Bitcoin, if it's maintained above 100K for like over 180 days right now. It did fall below its 200-day moving average the other day. Tom Lee has gotten more bearish in his price prediction for the end of the year, thinking that Ethereum would hit 7,500 in terms of his target. But we all know that right now with Ethereum at 3,300, that's not real to the majority of the marketplace, that it would even come close to that, okay? Because uncertainty is there and people's confidence is just shot. So the key point here is liquidity shifts drive everything. So let's talk about what's really going on right now, because November's clearly been obviously brutal. And so when you look at November being the worst month so far, it's not doing well. Bitcoin's not doing well. BMNR is not doing well. MSTR is not doing well. It's just the market's getting crushed right now for crypto, right? So if you look at a historical chart, November is usually green, but this year it's the worst in a decade. So it's safe to say that patterns of historical patterns of crypto doing well in October and November, we're not following those patterns. We're down over 8%, and that pain's visible everywhere in the crypto space. Crypto last 7 days, you look at just the dump, it's all red here. And ETH is down 12% against Bitcoin, and Solana's down 7%. So it's just not a good story right now. Fear and greed index down to 21. So lots of fear in the marketplace, no money being in the system. So there's just a liquidity crunch going on right now. The Federal Reserve is doing massive overnight repos again. They've injected roughly $130 billion in the last 5 days. So when they do a repo, they're loaning money to the banks, the banking system, and putting some liquidity in there. But despite what's even going on because of the economic shutdown with the government, we're getting smashed right now. So that's more than during the dot-com crash and even parts of the 2008 financial crisis. So why does it feel like there's still no liquidity, even though they're pumping some money into the system? Because of the U.S. government shutdown. Nearly 50% of all major air traffic control facilities face staffing shortages, according to the Federal Aviation Administration. About 13,000 air traffic controllers are currently working without pay. All right, so that's huge. and they're pulling money in but not spending a cent, right? Because they're not paying anybody. So if they're not paying their employees, money's not going into employees' pockets, money's not going back into the economy, and there's less liquidity. And it's not just numbers on paper. Half of U.S. air traffic control is short-staffed, right? So that's a big deal. Imagine going into the holiday season where air travel's at risk of shutdown because of politics, and we're looking at just challenges right now. So when the system's dry, Bitcoin's the first to take the hit. And that's what we're seeing right now. The system is dry. Bitcoin's taking the hit, despite the fact that we had 2 Fed rate cuts recently. Bitcoin's still taking a hit. And in December, there's still a likelihood that there will be another Fed rate cut of about 63% per the polls. But the government shutdown is knocking everybody in the dirt right now. ETF inflows were up for September and October, but down in November. So massive inflows October and September, but lots of outflows happening right now in November. Bitcoin ETFs were still solid through September and October, roughly about 4 billion in inflows during that time frame. But the first few days of November are negative. And Ethereum's ETFs are bleeding out $134 million a day right now. So ETH is getting whacked, draining $134 million per day. That is a massive outflow. So if we look at the weekly digital asset fund flows turn negative again, that's what we're looking at. We're in the digital asset space. We're in the crypto marketplace, and it's negative this week. Outflows of about 360 million last week. Markets also reacted sharply after Jerome Powell's comments. This is no new news, but he's saying rate cuts aren't guaranteed in December. So that's what turned the current rate cuts that we were getting more hawkish rather than dovish. And when Powell and the Fed get hawkish, then the markets get uncertain, hence the sell-off of Bitcoin that we've been seeing. This is a little data that I pulled from Invest Answers right here, which is really good data that James posted. It says in October, over 153,000 jobs were cut. That's a 175% jump compared to the prior month. So when you look at what's going on with AI right now, there's definitely AI being more efficient in the marketplace. Companies are using AI, and you're seeing jobs get cut. And you gotta think that AI has something to do with this, because that's a massive jump in job cuts. Now, as the Fed looks at this in December and starts to see that the job market is weakening, that's all the more reason for another cut coming in, which it's not good for people who are losing their jobs, but in terms of a rate cut, that's good news, okay? It's the worst October for job losses since 2003, and also since the post-COVID shakeout in 2022. So job market, no bueno. So companies are openly saying the same thing. They're firing to save money, and increasingly they're firing because of AI. Additionally, the story still does not change with the blockchain. This is all the more reason why more and more companies are going to move on to the blockchain. The blockchain is more efficient. It's faster, it's quicker. So none of this data changes the long-term approach of what's going to happen with Ethereum, Solana, BMNR, Bitcoin, MSTR. The long-term thing is crypto is still going to thrive. Bitcoin's still going to thrive long-term. And financial institutions are still moving on to the blockchain. The short term is just, let's call a spade what a spade is. Confidence shaken, and people are flipping out. Somebody's asking me in the chat box, am I trading BMNR on margin? No, I don't trade it on margin. I have my trading account, and I trade it every single day. So to answer your question, people are asking how I'm trading. So let me just share with you real quick how I'm trading. Again, if you want to get down below is a link. You can go get my book and a video on how I trade. It explains exactly how I trade. But to answer your questions, during this time in the market, because it's a seller's market and I own BMNR, I sell every day and I buy back low. So every day this week so far, except Monday, but Tuesday, Wednesday, Thursday, I've picked up more shares of BMNR. And so the strategy is simple. I follow indicators. When the signal tells me to sell, I sell. When the signal tells me to buy back, I buy back. There's certain policies I have of what I do and I don't do, like trading rules, a trading rule book, and I will pick up shares on the way down. Now, that doesn't mean holding BMNR that I'm immune to the market going down. It just means that when other people are taking big percentage losses in BMNR, I'm not taking that big loss. I'm picking up shares at the bottom. So my BMNR portfolio might be down a little bit, but most people have taken a hit from 65 down to 38. And that's what, a 35% drop. For me, in terms of trading and picking up more shares, my drop would be less because I'm buying more shares, buying more shares, buying more shares, buying more shares. And when you buy more shares at the bottom, like today, I picked up shares when BMNR was at like $39. So when you're picking up more shares at the bottom, imagine what happens when the stock goes back up. So all those shares that I'm picking up is going to be huge for my bag in the future, and also softens the blow right now. And the reason I started trading on this stock and just trade in general is because I don't want to be total effect of the markets. Nobody's total cause of the markets. So nobody can look and be like, I have a crystal ball and I know everything that's going to happen. Nobody has that situation. But when the markets go down, trading is something that makes me cause over the situation to pick up more shares, to buy low, even though I'm not taking money in my pocket. But when I trade, I sell high, buy back low, I pick up more shares. Make sense? And this is literally different pattern right now. But if you look back in August and September, when BMNR was at the $40 price point. So BMNR was at $40. It didn't go down to 38 or 37 like it is now. It touched 39 and shot back up. But all along that price range, as I shared in yesterday's video, I bought $22,000 more shares one week, $23,000 the next week, $18,000 the next week when it was in that $40 price range. So I picked up $60,000 worth of shares. Now I didn't buy it. I traded it and picked it up. Sell high, buy low. Make sense? And then at the end of the day, I get back into my position of BMNR. So people think that I'm selling BMNR. No, I'm not bearish on BMNR. I'm just picking up more shares and I'm holding my bag for the long term. But when it's down low, I don't want to be affected in the marketplace. So I trade. Make sense? Okay. So that's how I do it. So, I would be buying the dip right now if I didn't have a trading strategy, because I'd want to buy the dip. So I'd take my cash flow for my company and I buy the dip. But I have no reason to buy the dip right now with cash flow. The only thing I'm doing with buying the dip is trading. And when I trade, I pick up more shares. And that's essentially the same thing as buying the dip. Make sense? Okay. But I don't have to take money out of my pocket. So it's like buying the dip with no out-of-pocket costs. Make sense? So that's what it is. So I know a lot of people have been asking about my trading strategy. You can just get it down below. Click on the link. You'll download my book. There will be a video sent to you. In that video, you'll actually see what I'm doing, and you'll see the indicators that I'm following. You'll see the technology that I'm using to do it, 2 systems put together, because I give credit to where credit is due. It's not my trading software. But it helps me become cause. And in a market like this, nobody wants to be down in the crapper right now in a market like this and feeling like you can't do anything about it. So after the last bull runs and bear markets, I didn't want to be sitting there twiddling my thumbs when the market's down, because you see this all the time in a bull run. You start to see ups and downs and ups and downs. So I wanted to capitalize on the downs. Now, there is a chance we could head into a bear. That's you're hearing people talk about that. The sentiment is bearish. I still think we're still leaning more towards good things for BMNR and Ethereum and Bitcoin into the future. We're just not going to see the run we were expecting in December at the level that we're expecting. And if you watch the video that I just showed, Tom Lee is thinking it's going to be a rough couple weeks. So I think, or a choppy couple weeks, or it's going to take 2 weeks for us to recover, he says. A couple weeks. So that could mean 2 weeks. That could mean 3 weeks. That could mean all of this. It's November at this point. But while we're in this situation, I'm still continuing to hold my positions, continue to hold MSTR, continue to hold Bitcoin, continue to hold BMNR. The only thing that I do different than most people is I just trade and I pick up more shares. Okay, that's it. All right. So despite the fact that I'm sharing the facts and the ugly, there is some good news coming here. But I'm just trying to share the facts to give you some data. Okay. So with the bearish news, I'll always give you some optimism on it because I'm optimistic, and I do believe that the future is endlessly bright for Bitcoin, Ethereum, BMNR, MSTR, and the stocks that I own. Otherwise, I wouldn't keep holding them. Make sense? But you should take the data. You should go follow research, follow other channels, listen to other people, and just make your own conclusion of what's going to be best for you moving into the future, and make your own decisions. But pick up skills. That's why, to me, trading is a skill. One should have this skill. One should know how to make money, whether market's up or down. Okay, good. So link down below, go snag it. All right, so companies are openly saying the same thing, right? We hear the job market's not good right now, okay? You have AI efficiency, you got less people being hired, you got fewer expenses, you got less payroll being recycled into the economy. So, if you have less payroll cycling into the economy, that's going to cause a liquidity crunch. If you have the government shutdown and people aren't getting paid in the government right now, that's going to cause a liquidity crunch. And that's what we're in right now, a liquidity crunch, okay? So you think about the chain reaction, less money flowing through paychecks, slower spending, weaker growth, risk off sentiment, and capital exits crypto. And that's what you're seeing right now. So liquidity data we shared early, you got the Fed repo spikes, you got ETF outflows, and a frozen government balance sheet. All right. When money sits on the government balance sheet, that means it's not going into the banking system and into the economy. And when it doesn't go into the banking system and into the economy, there's less money circulating and people have less money in their pockets and they have less money to actually put into crypto and Bitcoin and risk on assets. All right. And that's what's happening on top of this unemployment wave that we see going on. Positive news around the corner. Once the government shutdown stops, hopefully it'll be soon, we should see a rebound and we should see sentiment turn around. We just got to get through this rough period. And hopefully, as the Fed Powell said on December 1st, we will still have or in December, I should say, I don't know if it's December 1st exactly, we will have the quantitative tightening, which means not putting money into the economy. That will ease up and we'll get more money into the economy. But we do need the government shutdown to end. We need it to end, okay? It needs to end, all right? Every chart from ETF flows to fear and greed shows the same thing. The system is tightening fast, and that's what we're seeing in the marketplace. So the environment is a big liquidity crunch, and that is the answer for the downturn right now, okay? I just went through all this, okay? But here's what's happening with some positive sentiment in the marketplace if you see moves that are being made by institutions. So Metaplanet secures a $100 million loan using its Bitcoin as collateral to buy even more Bitcoin. So Metaplanet's going further in on buying Bitcoin. Saylor doubles down on his conviction, says Bitcoin's on sale in a market pullback. And I have one of my friends, he's a friend, he's also in my trading course, and he was texting me the other day. He's like, I'm buying on the way down right now. He's buying on the way down. Okay. So there are people buying the dip. And just look at it. Michael Saylor shares a bold message, upgrade the world, symbolizing Bitcoin's mission to transform the global financial system. Upgrade the world. He's not wavering at all. Metaplanet's not wavering. Saylor announces Stretch closed at an all-time high of $100, hitting record volume with 1 million shares traded. If you look at the makeup of Stretch, it's an extraordinary product. Saylor is on a mission to make Stretch available to hundreds and millions and potentially billions of families so that people can retire. In a few words, it pays out about 10%. And it also has its tax deferred feature, so you don't pay taxes on the dividends. So that's equivalent to like a 15% rate of return. So for people who want to retire, this is going to be the vehicle of choice in the future for people who want a nice rate of return of 10%. If one's wondering, like, is strategy in trouble? Strategy is not in trouble. Okay, strategy. We those of us who hold the stock, like we're in paper trouble right now because we're like, damn, the stock keeps dropping. This literally feels like April again. We're sitting at 240 or 238 with strategy right now. It feels like April. The dump, the tariffs, strategy goes all the way down, and so it feels crummy as hell. But I'm not selling my strategy. I'm holding on to my strategy. Okay. Yeah, so somebody's asking again that you're saying that you're not using your own money. How are you trading then? I am using my own money in the trading marketplace. I'm just taking my BMNR stack that I hold. And so I hold BMNR and I sell it and I buy it back. And so when you sell something high and you buy it back low, you pick up more shares. So it is my money. It's just like normal people would buy the dip right now and be like, I'm going to put another $1,000 into BMNR. I'm making way more than $1,000 a day trading with BMNR. So when other people are saying, I want to buy $1,000 more dollars more BMNR, or $5,000 more BMNR, they're taking it out of their pocket. I'm not. I'm just selling high, buying back low. That's it. Okay. Hope that answers your question. Yes, and she's asking, are you selling your $60 shares? Yeah, I bought BMNR 3.5 months ago. So like so many people I know, even friends I told about it, they got a BMNR at a better price than I did. Right? I was literally talking about BMNR 3.5 months ago, 4 months ago when it first came out. The hype was big. I bought it at $60 and I bought a lot. And in the last 3.5 months, I've traded down my cost basis into the 40s. So my holding cost for it now is not in the 60s, it's in the 40s. Make sense? Because I trade. And all my friends who listen to me, they bought, a lot of them bought in the 50s, the 40s. I got one friend now who's buying freaking in the low 40s. So there's a lot of people that are getting in now. I wish I could have gotten in now with my original capital. But I was like, I believe in this stock. I know where it's going to go. I'm going to buy in now, and then I'll just trade. Make sense? Okay. So there you have it. So Saylor Stretch is a big news in the marketplace for what he's doing, but again, it's not helping us right now, present day with MSTR, other than adding, when he does issue more shares of Stretch, he takes that money and buys Bitcoin. So long term, it's good for us as shareholders. All right. You got Zinc calls Stretch the iPhone moment for strategy, predicting over $1 trillion will flow into Bitcoin credit markets in the coming decades. So all these products that Saylor has are literally setting him up and strategy up for just a huge future. Strategy long term is a freaking winner. In the short run, it's a buzzkill right now. I get it. So, and depending on when you bought it, it's a super buzzkill, right? But long run, it's a great stock, and so that's why I continue to hold on to it. Chris Milas criticizes U.S. monetary policy, saying the dollar is being devalued by 8% yearly, while most people remain unaware. And it is. On average, the dollar gets devalued, just so you know the data. For the last 100 years, the dollar has been printed at 6.5% more every year. So every year for the last 100 years, the dollar has been devalued by 6.5%. That's the true data, all right? So whatever that is today, Chris is saying it's 8%. That has a drag on your investments. Why do you care? Because when you're going to earn money in the stock market or crypto, there's lots of drags on your money. One of them is the printing of money. So when there's more money printed, when they say debases the currency, it means that your dollar buys less. And so that's what's happening in the marketplace when they print money. So that happens all the time. So every year your dollar is getting debased, which means it purchases less. You got inflation as well, which debases or lowers your purchasing power. You got taxes, which lower your purchasing power. You got management fees. Go check out your funds, man. I'm telling you, go look at if you have a financial advisor, go find out what your fund costs are. All right. The more I do this, I mean, with friends, I help all the time. I was just doing this with my parents yesterday with their financial advisor. Pull it up. I want to see the fees. I want to see the fees. And sure enough, as I've been talking in this video all the time, 1%. 1%. When I ran the calculations for my family, I said, if you continue to do this, it will cost you 15 to 20% of your portfolio value over the next 20 years. 1% will cost you 15 to 20% of your portfolio value over the next 20 years. That means if you're expecting to have $10 million in 20 years, you now have $2 million less. So unless the advisor is getting me 50% rates of return a year, that ain't happening. You know what I'm saying? So you got to take a look at the drag on your money and really look at the drag on your money. It's just a massive drag on your money. If you own a house and or you're saving to go buy a house, that will be a drag on your money because you will pay not 3% per inflation. You'll pay, there's a 5% increase in houses per year on average. Right, so you'll pay 5%. You have to pay 5%. Every year it goes 5%, 5%. When you go get a loan, a mortgage loan, the average is 7% over the last several decades. You're paying 7% on that. You got taxes on your mortgage, on your property taxes, I should say. So you have such a drag on your money. You got car loans, you got debt. Right, one has to do 15% a year to keep their head above water. So I keep repeating this on this because that's the positive news after I just shared all the bad news. But the positive news is, even though Bitcoin's down to 101 or wherever it is right now, that's not positive. But the positive news is those who hold Bitcoin and hold MSTR and hold Ethereum or hold BMNR or invest in certain AI stocks that are winning, over time, you have a chance to beat the 15% drag. And I would be shocked and probably change my name if I discovered one day that Bitcoin is not going to do 15% a year over the next 10, 20 years. Like Bitcoin is going to do better than the S&P 500. It's a newer asset. It's a It's a scarce asset. It's a finite asset. It's a far superior technology in terms of other technologies out there. And it's going to beat the S&P 500. So long term, you got to zoom out in times like this and look long term and go like, why am I invested in crypto to begin with? If I'm invested for the quick, fast gains, I'm always going to have some level of disappointment, because with crypto, you're going to get quick, fast gains, and then you're going to get drops, right? So you're always going to have some level of disappointment, even during a bull run. You're going to have that. So you just got to ask, like, why am I invested in this? And I continue to go back to the fundamentals. I'm a big believer in the fundamentals. I got 60,000 business clients around the world, and we always talk about the fundamentals, that if you don't have fundamentals or understanding the fundamentals, you don't win. And the fundamentals are, in the world that we live in today, there's a 15% drag on your money from all the things that I just said. So you don't make money unless you earn 12, 13, 14%. If you earn 12, 13, 14% on your stocks, your head is below water. You're snorkeling. So when you invest long-term in new technologies like AI or blockchain or things of that nature, that's when you have an opportunity to do 20%, 25%, 30%, 40% in a year, right? Or beyond. And so, but that comes off holding the assets longer term and then taking profits when you have an opportunity to take profits. Make sense? All right, I'm not in the place where I'm taking profits right now. I'm just trading to pick up more shares because I believe in the assets long term. And as I've said, if we have a nice run that happens next month, happens in 2 months, 3 months, 4 months, 5 months, 6 months, I will then take some profits with strategy. I will take some profits with BMNR. I'll continue to hold my Bitcoin, and then I'll rotate into some other stocks. Make sense? So that's the idea. So there is the reason why I hold Bitcoin long term, because the alternative, there is no alternative with traditional finance for me. All right, not financial advice to anybody else here, but there's no alternative there because of the way it's set up. That system is not set up for the customer to win. It's not. And our current financial system, with the way we print money, is not set up for an economy to thrive. We live on a debt system. That's why the U.S. is $37 trillion in debt. We live in a debt system. And so if we live in a debt system and the basic foundation of the system is debt, then one would not be surprised that most of the U.S. Economy with people and households have a lot of debt. And I shared on yesterday's slide, if you look at the household income of what people take home after taxes, is $25 trillion. If you look at the debt payments that go out, it's $17 trillion in debt. Not payments, but it's $17 trillion that's held in debt. So 25 trillion in, 17 trillion in debt that's being held by American households. Go take a look at the research in your economy if you live in a different country. But so we have a system that's flawed, and it's heavily flawed. And so Bitcoin becomes the hope, and Bitcoin becomes the base foundation of the crypto marketplace, which is why one needs to understand Bitcoin first. And that's basically what's going on. So when you see these players here who are buying more, when you see, for example, Zinc says Bitcoin dips are just coins moving from weak to strong hands, predicting $1 million Bitcoin as long-term holders keep rising. Obviously, they're predicting this way into the future. But when you see these types of things and people being more bullish about the long-term of Bitcoin, it's because these institutions are stacking. You have companies like Strategy stacking. You have Metaplan stacking. You have BMNR stacking Ethereum. It's an institutional game where they're stacking because they're playing the long game with this. And when you see the news I just reported, where you see Strategy, Bitcoin on sale, because their fundamental strategy is to keep buying Bitcoin, keep buying Bitcoin, keep buying Bitcoin. Because if you look at the premise, and this is important too, and again, I'm not sharing all positive news here. I just shared all the bad news in the beginning. But if you look at the basic premise of how Saylor's operating, it is the basic premise of how households are affected in this world. And his basic premise is simple. When he was sitting on $500 million of cash in his treasury and COVID hit, he realized that he's sitting on a melting iceberg because of inflation, because of money printing, because of taxes. And so when he looked at his $500 million of capital, he realized that he was going to be, as a company, probably bankrupt in 5, 6, 7 years. And so that's why he decided to move his money into Bitcoin. And the basic premise or idea or foundation of what Strategy is building upon is the same situation, not identically same, but the same in concept that American households and people all around the world in different countries are facing, is that sitting on cash is a melting iceberg. And you can't win sitting on cash. And so one has to make a fundamental decision like strategy did to go, we're going to change our entire strategy, pun intended, moving forward, where we're not going to be one of these companies who sits on cash that's melting and sits on a weakening dollar and sits on fiat currency, which is only backed by the good word of your government. We're going to change our strategy for the next several decades. And they did. And overall, as they did, they flourished. All right. And so it's a good example for people who are looking at traditional finance to go, like, what is my long-term play? Like, if I zoom out, because you got to look out 4 years, 5 years in the future. Again, shitstorm in the last 2, 3, 4 months. Nobody likes it. But you got to zoom out and go, what is the long-term play that I'm playing here? And if I'm not playing for a longer-term future where if I don't believe in Bitcoin as being the future, then I have no business personally being invested in it at all. Because that is the future of for me, it's one of the futures of investments. For one of the smartest decisions one could make in the marketplace is to be in Bitcoin because of what it is. So these basic principles, like, they're not going to change over the next 4 years, 8 years, 12 years. Bitcoin will just become a more stable asset. And then the blockchain is not going away. So if you base your thesis and you believe in like Solana or you believe in Ethereum, like, Ethereum is not going anywhere. Right, despite the fact that we have money flowing, 134 million flown out of ETFs, like, it's draining out right now. But Ethereum's not going anywhere because Wall Street's building on top of it. So with these basic future outlooks, while one can feel crappy today, and I'm in the same sentiment, like, I wake up and I'm like, this sucks, we're dropping again, right? So I'm not walking around with like, oh my God, it's amazing, this is the most wonderful thing in the world. No, it sucks. I don't like to see it down. Make sense? But I hold on to two things. One, long term, it is the bet, right? And it's the smart bet. Two, I trade every day, so I pick up shares at a low cost. So those are the two things for me that outweigh the short-term bust, right? And so if you have a foundational knowledge and you believe and you know that the future looks great because you believe in the technology, because that's what it is. Bitcoin's a technology, Ethereum's a technology. Like, entire financial, there's a whole city. Right, that's what Ethereum is. A whole city and financial buildings are going to be built on top of this city. Financial applications, they're already being built. So you're going to have a whole city flourishing, and you're going to have a new economic system, and that is a fact. Because even if you look at the traditional financial products, which basically are they're just not good. They're just not. I mean, we've been sold the story for a long time that you're going to earn 12% and that's going to be good. It's just not good. It's not good. Let's just face it. 12% rates of return are not good. Right, with everything that I've shared about the drag on your money. So if you have traditional financial products in the marketplace are not good, a fund manager taking 1% fees are not good, and you ultimately look at the system overall with how slow the system is because it takes so long for transactions to settle, for money to be sent. There's so many middlemen that are taking a slice of the pie. Even the way the Federal Reserve works, you have the banks taking a piece of the pie. Because how do you think money comes into the U.S. Treasury? Mostly your tax dollars. When that money comes back in, the U.S. government needs to pay back the Fed, right? And then the Fed takes that money and they either delete it from their balance sheet. If they're tightening money supply, they delete the money that goes back into the Fed. So they delete it from the balance sheet. Or at the end of the day, the Fed then redistributes that back into the economy and they put it in the banking system. And when they put it in the banking system, they give it to the banks first, right? So, and the way they do that is like the U.S. government, the Treasury goes, hey, daddy, I need a loan. The Fed goes, no problem, we'll give you a loan, but first we're going to give it to the banks. First we're going to have the banks, the private banks give you a loan. So the private banks give the U.S. government a loan. And then the Fed comes and buys that loan back later. So that's called a middleman. I mean, why doesn't the Fed just give the money to the U.S. government? Right? It would be too obvious how ridiculous that is. So the Fed gives it to the bank. The banks, the private banks give it to the government first. The government now has money in their piggy bank, and the Fed comes back in and they buy that loan back from the private banks, and now the government's in debt to the Fed. Right? And then your tax dollars go to the government to then pay back the Fed. That's how the system works. So when you look at this loopy system, you have this loopy system where there's so many middlemen. The banks take their skim. They take their profits from that just for holding the loan for 2, 3, 4, 5 months. They take their profit. So the banks are putting money in their pocket. And then you at the bottom of the totem pole and me, we're getting the crappy loans for the 7%, the 6%, the 5%, the 8%, the 9%, the 20% credit cards. That's how the system works. So the system is entirely 100% broken. Like 100, you couldn't even, Like if you were to want to design a broken system, like I don't even think you could dream up a more broken system than this. That's how broken it is. Okay. And so that's why I'm in Bitcoin, because Bitcoin was the first hope after being in financial services. I was in financial services. I was 21 years old. So after being in financial services at 21, 22, 23, 24, after running an organization, being one of the top partners in the organization that I was a part of, I was number 5 out of 500 partners in this entire company, and always searching for new ideas outside the company because I didn't believe in the company's products overall in terms of the way the strategy was run. So I wanted to learn new strategies, new ways of doing things when we were inside this company. So I was studying new systems. How does money really works? How can we actually be strategic about people's investments versus just throwing them in a product and hoping? So I learned about this system from the inside, and I saw it. And as I saw more and more of it, I just was like, this doesn't work. It doesn't work. And Bitcoin came along, and it was the first time in over a decade where I started to believe in finance again. When Bitcoin came along, yeah, I was invested in Tesla before that and Amazon before that, invested in traditional stocks. But when Bitcoin came along, I finally believed that there was hope for the American public and hope for countries all around the world, because it was the first sign of rules that made sense, that were logical, versus the current financial system that is actually not based on logic. It's based on an illogic. And anytime you have something that's based on an illogic, you gotta have all these loops and all these middlemen to really, it's really like, it's a confusion to hide what's really going on. Because the most simple path is A to B, and that's why crypto is so good, right? Because if I want to send money to you, I just send it in seconds and the fees are low. But when you have a bank and a middleman and a middleman, another middleman to send it to another bank that then sends it to you, and you have all these fees, that's not A to B, it's A, B, C, D, E, F. Anytime you have that, you have inefficiency, right? And where does that cost get passed on to? It gets passed on to the consumer, you, which is why your loans are way more expensive, right? And which is why money's so damn expensive on credit cards. Money shouldn't be expensive on credit cards at 28%. That's ridiculous. It's theft. That's what it is. It's ridiculous. It shouldn't be that for the public. It's insane. Particularly when those same institutions are getting money that's being printed and given to them. Like, why should that be? So you got to start questioning the current system, and you got to start really asking, like, this current system is not based on logic at all. Okay, not based on logic at all. The whole idea of holding massive amounts of debt, like, that's not logical at all. So these principles of traditional finance are, for the most part, there's some that are solid, right? Like 1 + 1 = 2. That's a solid mathematical principle. But for the most part, if you look at many of the financial products in the marketplace, they're not based on logic that's good for the customer. But if you create a story and you tell the American public or the world, and you say that 14% rates of return are good or 12% rates of return are good, and you sell the story, then people will buy the products. Make sense? And you look at, there's many industries there's industries that operate like this. They'll sell the story, and once you sell the story that this is the problem, people will buy the solution, right? So, or if you sell the story of like, this solution is really good, 12 to 14%, people will buy the story just because you keep selling the story, but it's not based on logic. So whatever you do your research on stuff. Make sure that as you're going into anything that you're doing, like, do your own research. Everything I'm sharing is for educational purposes only. Tom Lee did buy some more BMNR today. So they bought $137 million more worth of BMNR. If you look at the MNAV of BMNR, it compressed. So their MNAV is roughly sitting around, I think 1.15 right now. So the MNAV has compressed for them. Maybe it's around 1.2. I'll have to look at it in a unit of time based on where the stock's at. So the MNAV is low, but for BMNR, their MNAV has been like 1.3-ish. We're not talking about BMNR having an MNAV where it's run up to 2 or 3 or 4 in a consistent manner. It's been very low all along. And so if the bull run does continue, if sentiment picks up, you'll see the MNAV increase for them. And Strategies is very low right now. It's the lowest it's ever been, as you see by the price on the stock. Okay. But with that, again, that's bad news, not good news. But when you look at it, zoom out, like, what does 4 years look like for you into the future? If that's too short of a time horizon, what does 10 years look like? We'd all like to have money and more money right now sitting in our pockets as a result of this October and November, but unfortunately it did the reverse for us. So hope this serves you. Plan A is traditional finance. Plan B is crypto, which is the foundational point of Bitcoin. So what are you going to choose? Totally up to you. I've made my decision, which is why I continue to do these videos and share stuff with you guys. So I hope it serves you. Go get my book down below. It'll give you a lot more certainty on Bitcoin, Ethereum, MSTR, BMNR. And for those of you who want to know my trading strategy, how I'm picking up, still week after week, minimum 5% average per week, I'm picking up. And on average, so I have had one week where I've lost in the last 17 weeks. Other 16 weeks, I've won by picking up more shares. So I'm using the current investment I have in BMNR. When BMNR, when it looks like it's a good time to sell, I sell, and then I buy back same day and pick up more shares. And I do that as the price is dropping. Doesn't mean I'm not effect of the market dropping, because I hold BMNR, but I pick up shares when the market drops. Make sense? All right. Hope it serves you. Have a great rest of the day. Stay well. Stay strong for you and your family. And I'll see you on the next one.